Let me ask you something. If I gave you $1,000 today, how long do you think it would take to turn that into $2,000? A year? 6 months? Maybe even faster. Social media makes it seem like doubling your money is easy if you just find the right stock, the right crypto, or the right strategy. But today, we're cutting through the hype. In this video, I'll show you how long it actually takes to double your money using real historical data and what that means for beginner investors trying to build wealth the smart way. Part 1. The Rule of 72. Let's start with a simple tool investors use called the Rule of 72. It's a quick way to estimate how long it takes to double your money. You take 72 and divide it by your annual return. For example, 6% return, 72 to the 6 equals 12 years. 8% return, 78, 9 years. 10% return, 72 Vinhenel, 7.2 years. This isn't perfect math, but it's surprisingly accurate. And already, you can see something important. Even at strong long-term returns, doubling your money takes years, not months. Part 2. What the stock market actually returns. So what kind of returns can investors realistically expect? Historically, the U.S. stock market has returned about 10% per year before inflation, around 7% after inflation. That's based on decades of data from the S&P 500. Using the Rule of 72, at 10%, money doubles in about 7 years. At 7%, money doubles in about 10 years. That's the reality for long-term investors. Not flashy. Not exciting. But incredibly powerful over time. Part 3. Real data example. Let's make this real. Imagine you invested $10,000 into a broad stock market index. At an average 7% real return, year 10, about $20,000. Year 20, about $40,000. Year 30, about $80,000. Notice something important. The first doubling takes 10 years. The second doubling also takes 10 years. But the dollar amount of growth gets much bigger. Time, not luck, is what does the heavy lifting. Part 4. Why most people fail to double their money. Here's the uncomfortable truth. Most investors don't earn market returns. Why? Because they buy after prices go up, sell after prices fall, chase hype, panic during crashes. Missing just a few of the market's best days can cut returns in half. And suddenly, Your 7 to 10 year doubling turns into 15 or never. The biggest enemy of compounding is emotional decision making. Part 5. What about higher returns? Could you double your money faster? Yes, but the trade-off is risk. To double your money in 5 years, you need 14 to 15% annual returns. 3 years, you need 26% returns. 1 year, you need 100%. Those returns exist, but they're rare, inconsistent, and often involve large drawdowns. For most beginners, chasing high returns increases the chance of losing money, not doubling it. Slow and steady usually wins. Part 6. The smartest way to double your money. Here's the best strategy for beginner investors. Invest consistently. Use diversified index funds. Reinvest dividends. Stay invested during downturns. Give your money time. The earlier you start, the more times your money can double. One doubling is good. 2 doublings is powerful. 3 doublings changes lives. The big takeaway. So how long does it actually take to double your money? About 7 to 10 years with realistic long-term investing. That may not sound exciting, but it's real. And it works. If this video helped reset your expectations, hit like and subscribe for more investing content like this. See you in the next one.